the Bullington Capital Report, hosted by Bill Bullington. For the next hour, you'll receive information on current market conditions and trends that could affect your financial future. If you have a question, you can participate in today's program by calling 216-901-0945. That's 216-901-0WHK. You can also reach Bill by going to his website, bullingtoncapital.com. And now, here's Bill Bullington.
Well, welcome back. Hope everybody's had a wonderful Thanksgiving weekend this weekend. Hope you didn't get run over in the stores yesterday or today. But anyway, it's been a very interesting year when you look back at what all you have to be thankful for. It's hard to believe that a lot of stock funds have either made up or are very close to where they were near the beginning of the year when markets had peaked before they knew about the coronavirus. That's amazing. So why is this happening? Well, actually, it's probably because the anticipation of the cures that are being out there, that are being talked about out there, actually. In fact, I'm looking at Bloomberg Business Week, and there's an article in there about Operation Warp Speed and how many vaccines they'll be able to get out, how many companies have them. It's pretty fascinating, and it's actually a good thing. The tough part about something like this is that it's so difficult psychologically and emotionally, and it has a whole lot of people not maybe thinking as clearly as they should or could. And then you have an election year, which is always stressful. So we've had all this stuff going on, and man, I am just going to be really grateful to get to 2021 and see a lot of this stuff go by the wayside. And there will always be problems. There are always going to be problems, and the problems that we have today, quite frankly, a lot of them we've seen a lot of this stuff before. So I guess we've got more experience now and can deal with it a little quicker, a little easier. The whole world moves faster. Capital moves significantly faster than it ever has because of all the computers involved in financial services industries in general. It's all good stuff. I mean, I'm looking at it in the what are the negatives? Well, we still have the pandemic. That's pretty negative. That slows things down. It's actually picking up speed again. So that might slow things down a little bit here in the short run, but in the long run, it's unbelievable how the speed has picked up on the advancement of a number of things. It's not just drug companies working together to get vaccines out. I mean, governments have worked together like they've never worked together in the history of the world. That's mind-boggling. I look at all the 5G stuff we've been talking about here for an extremely long time. That is just in its infancy. I mean, it is just getting... You know what it's like? It's actually like where computers were in about 1994. Now, I'm probably one of the few people that remembers that because I always had to pay for my own computers. And in 1994, computers weren't very fast. You had internet, but there were no pictures on it. Basically, you would get into a chat room where you could send texts or emails. That's about that was about the extent of it. And if you look back to those days, and everybody knew, well, we didn't know just how fast and how much and how deep, and actually the design of the modern internet, we had no idea that was going to come, that they would be able to duplicate a lot of that, the pictures, 4K, touch screens with super high clarity, all that kind of stuff. But if you go back and you look in history where we were right around 1994, 95, I think we're right there with 5G. That will have an impact. It's going to improve the clarity of the pictures. Actually, you'll probably be able to see people in 3D, which you can now. You get a set of goggles, but that's going to be communication. You're going to be looking. You're going to put the goggles on and then talk to whoever it is that you want to talk to. That is hilarious to think of that. But that's, that is just around the corner. That technology already exists. And a lot of the technology that exists that's being rolled out. That's the challenge. And quite frankly, in America, we actually, it's a little bit more challenging here because you have 330 million people. I think it's the fifth largest country by population, but they're spread out. And we are all over the place. I think America's a fairly large country. You look at Europe, and Germany's not that big. England, I think, is the size of Pennsylvania, Ohio, and Indiana. That's it. So they can actually roll out faster than we can because their population is more dense than ours is, and they're not covering as many miles as we are. The 5G, if you've read anything about it, has a problem with being able to broadcast over long distances. So you got to put a lot of these little towers up or transceivers. And the good news is those things are tiny. I mean, they're very, very small. So it's not like you have to put up big towers every 300 feet or so. That would defeat that industry if you had to do that. But it's really changed a lot of the way that we're living, especially with the pandemic, people working from home, at doctor's visits. And we are just getting started with that. And it's funny, I try to talk to some older people about it. And of course, they don't want to learn technology. I get it. It's very frustrating. I think one of the worst things in the world is how frequently you have to change a password. I have a password manager. I literally have software that I pay money for every month to be able to organize and keep up with that stuff because I've got more than a couple hundred of them. And they're always forcing me to go back and change it. Well, I'm here to tell you, they have technology that can read your voice print. Your voice print is just as unique as your fingerprint is. They can read your face print. It's not really a face print. The distance between your eyes, your nose, and your upper lip. That's also unique. And so the facial recognition software can recognize that. And you've got other biometrics. You can scan your hand or one of your fingers, and I think everybody's got the devices with Mac for that, or anybody that has an iPhone is already familiar with that. Actually, on my iPhone, I use the facial recognition. So what I'm saying here is that we are really close. I mean, probably within 5 to 10 years of not having to have house keys. You'll come up to your house, it's going to read your biometrics and let you in. And if you don't have them all, you don't get in. And every time I start thinking about that, I start thinking about some of those Mission Impossible movies with Tom Cruise, and they put the masks on. And they even have the things in there that changes your voice. But as far as I know, that doesn't actually work. But it makes for good movies. Yeah, and we are hoping that it doesn't work. But so it's unbelievable how close we are to that. And I remember reading about all this stuff back in the 1996. I saw what was going on in 94, 93, and I'm looking at it going, wow, this is pretty interesting. So I started following all that and trying to follow up. And by the way, you know what one of the better publications is? It's actually Popular Science. It's unbelievable. The Popular Science is written for the general public. Those guys are like 10 years in advance. I mean, a lot of the stuff that they do is not going to show up for 10 years or so. And then you look back and you go, wow, I remember reading about that. Yeah, yep, that's going to happen. So there's so much going on that's going to fuel the growth in the future. Solar panels, that's been around for forever. Go to Tesla's website, by the way. You want to really spend a couple minutes and maximize the amount of time that you're going to spend researching alternative energy, basically electricity. Not just cars. Solar City, those were his cousins. He bought that company. That's part of them now. And it's one of the bigger solar panel manufacturers in the world. And the Tesla batteries for your homes and your cars. And they're spending a whole lot of money on that stuff. That's why that stock is so richly valued, because people are looking at all the businesses that he's in are all growing 30% or better. The industries are all growing by a third or better. Now, that is mind-boggling. That's why people are willing to pay so much for that stock. And I don't mean much by the share price. I mean, when you look at the sales that they have now, and you look at the profits, the share price is not, it's not a deal. It's not a bargain. Okay? But I can see how they get talked into, or how they start thinking about, yeah, well, these guys are just going to keep growing, and then they're in the fastest growing industries, and they're already doing billions and billions and billions of dollars in sales, and it's still growing by 30% a year. Okay, just don't put a lot of money in there. And I know it's in several of the funds that I own, so that's how I own it. I don't really worry about getting an individual position in it. It has come up on the Lookout for the Bull list several times, and I've owned it every time it came up. And been very profitable doing that. So when I look at what they're doing for the overall economy, thank goodness for people like Elon Musk. I don't know what you think about him, but I'm just thankful he's around because he just keeps pushing the envelope. He was one of the original partners with PayPal. That was a long time ago when he was really, really young. That's where he got a lot of the funding and got the reputation to be able to get funding for Tesla when they were doing basically just electric cars. They looked like toy cars, actually. They were really small. And he got a $500 million grant. A $500 million grant. Okay, grant means you don't have to pay it back from the federal government of the United States. And thank goodness, because he's really used that money very well. He's grown an unbelievably large company. So I'll stop talking a lot about that, but these are all things that are going on behind the scenes. They're not in the day-to-day headlines because you're not going to see that. First of all, they're behind the scenes. Whether I would be using electricity that was generated by a solar panel, a windmill, or it was captured by the solar panel and was stored in a battery and then was used. Nobody knows. Nobody pays attention to that because very few people are responsible for paying the bills for all that equipment. If they're paying a bill for it, then they know. But this stuff a lot of it's just behind the scenes, and it's growing like crazy. It's going to provide an enormous amount of growth for the future. It's going to provide jobs for the future. Man, if I were a kid in high school, I'd be looking to be an electrician because all this stuff has to be hooked up. So I would. That's what I would look to do. And I tried to do that when I got out of high school. Actually, if I had gotten accepted, you probably wouldn't be here right now. I'd probably have my electrical contracting company just working away. And thank goodness, I guess. I'm not sure. I know a lot of electricians do incredibly well. But at the time that I went to apply for it, you couldn't be colorblind, and I didn't even know I was colorblind. I had color impairment. I took the colorblindness test, and they said, "Sorry, man, you can't. You can't be an electrician. You grabbed the wrong color wire, you're done." And I'm going, "Oh, wow. Okay, well, I guess I will go to college anyway. After all." But it came that close. I was trying to get in the program. They were all excited too because they came from high schools and stuff like that. That's neither here nor there. But when I look around, all I see is a whole lot of potential, and I see a lot of companies, and I see a lot of countries putting money to work in these industries. And I remember back in in my earlier career, back in the mid-'90s. Actually, that's when I started this show, was in the mid-'90s, 1996. But I can remember a couple of years earlier than that, and I was always fascinated by technology and how the world had progressed and advanced, and what that kind of stuff took, and it was just really fascinating for me. And I remember speaking at I can't remember, it was I think it was it was Rotary, and I belonged to Rotary, and they asked me if I would do a little talk there, so sure. And I started talking about the smartphones. We weren't calling them smartphones back then. That was before Apple or whoever it was that coined that term. Had actually coined the term. So I was talking about phones that you'd actually be able to look at each other on, do the FaceTime thing, and the watches. You still can't do the FaceTime thing on watches yet. It may come at some point in time. I don't know if people would really like that much because it's only like an inch by an inch screen. That'd be pretty tough. But I was talking about all this stuff, and one of the members there looks at me and just goes, "How could you be so positive?" is a female, by the way. But how could you be so positive? Oh, history? I'm just looking in history. And that's the same thing I'm doing today. I don't have a crystal ball that works. I do have a crystal ball, and it doesn't work. And if you come into my office, I'll show it to you. Did I just hit a button? Yeah. Is that? Oh, okay. Thanks. But yeah, you don't have to have a crystal ball that works because this stuff, they roll it out. They talk about it years in advance of it coming out if you are paying attention. If you're paying attention to the news on television or quite possibly on the internet's kind of half and half. But they're not going to cover this stuff until it's actually too late to do anything about it. I mean, it's by the time they get around to covering it, it's already there. So again, Popular Science, Popular Mechanics, those are nice magazines. There's MIT Technology Review. That one, don't buy that one. Go to the library. Yeah, it's pretty sophisticated, and they're just. By the way, get ready to get frustrated because there are lots of solutions to problems that we all have that never make it. For some reason, they just never make it. I guess they should take it to Shark Tank. But some really good ideas, and there are some fuel cells that use hydrogen, which is the second most abundant element in the universe. Might be the first. I don't know. Yeah, I'll have to go back and Google that. But it's super abundant. They use hydrogen, and they create electricity with it, and the only byproduct is water. And I kept thinking, wow, this is good. That is it. That we're home. They can do this, electromechanically generated electricity. Yeah, that is redundant, but it is awesome. I hear the music. That means I got to take a real quick commercial break. You listen to Bill Bullington right here on 1420. Stay tuned because I will be right back.
Lost your way.
And we are back. Hey, if you'd like to schedule a call, come in and talk about your own personal financial situation with me, just give me a call or go to my website. It's bullingtoncapital.com. You can sign up there, and somebody will call you back pretty quickly. And I have to talk about last week. Last week, I talked about a couple of the articles I sent out in my newsletter. I send a newsletter out every 2 weeks, and I edit the newsletter, and I select the articles for it. So if you'd like to get on that mailing list, feel free to go to my website again. It's bullingtoncapital.com. I will definitely sign you up for that. I like it. I subscribe to this service that allows me to get articles from Barron's, Bloomberg, Business Insider, Entrepreneur Magazine, Forbes, Fortune, Harvard Business Review, Insuranceopedia, Investopedia, Irish Los Angeles Times. I think actually there are too many. The Wall Street Journal, the New York Times, the Guardian, the Economist. There are literally a couple hundred. Boy, is technology cool. Because you could actually get lost in there, by the way. I probably spend way too much time reading these articles in there and trying to decide which ones I want to send out. That's pretty tough. So anyway, I think today it's unbelievable how complicated everyone has made this business. And, well, you're going to be wrong if you don't do this. Well, maybe not. That's one of the reasons that I guess people have advisors, because trying to keep up with it's a lot. I'm sure I spend, probably 15 hours a week minimally just reading. And that would be a minimum, by the way. And it's a good thing I like this stuff, because I can't imagine the torture of having to do that if you didn't like it. So, but anyway, and we also know today is kind of an age of specialization. You really need somebody who can do taxes. You really need somebody who can do the estate planning stuff. Those are lawyers and professional tax preparers. Those are almost a necessity now. And having someone who has talked to them, I'll tell you what, another necessity, somebody who understands health insurance. That is unbelievable how much in changes they've made to that. and just the Medicare programs. Holy cow. So I'm lining up a guest who is a specialist in that area. I will tell you that this guy's, he's relatively new to the industry. That's okay, because if you're focusing on that particular area, that's something you could get down in less than a year. You could actually be an expert in that in less than a year. So he's going to be coming on, and we're going to be talking about that because it is spooky. I mean, when you start looking at some of the stuff that you could potentially have to pay for, and how to get coverage. Do you get drug coverage? There's Medicare Advantage plans versus traditional Medicare, and it is mind-boggling how complicated they've made all that stuff. I think we have a caller calling in. If you'd like to call in, it would be 216-901-0945, 216-901-0945. And I have almost forgot that number. It's actually written, and it's right in front of me, too. I guess they dropped the call. But, hey, if you want to call in today and ask a couple questions, 216-901-0945, 216-901-0945. And that's one of the roles that an advisor has is for you to be able to bounce ideas off. And I was given an idea about a month ago by a gentleman, and it is really complicated. He's probably laughing right now because he knows he knows I'm talking about him. But there are so many options that is pretty difficult. What's also difficult is setting your own goals. That's not an easy thing to do, setting a goal. But I'm going to help you out here a little bit. If you're under the age of 50 and you're looking for retirement planning advice, let me tell you that you probably need about 80% of your of whatever you make today to be able to continue your lifestyle. Why am I saying that? Well, you're not going to be paying Social Security out of your check in the future. And so that's going to give you about 7.5%. If you're self-employed, that's 15%. Yeah, and you're probably not going to you're not going to be doing the saving either. So you should be able to get by on 80 to 85% if you're saving enough money now. You need to be saving 10 to 15% of your income. That's kind of a minimum, 10 to 15%. But if you're doing that, you should be pretty good. And my phones are actually lighting up, by the way, so I'm going to go to the phone call right now. I've got, I think, is this Joe? Hello? Joe from Parma, I can't hear.
You cannot hear me.
Oh, I can hear you now.
Can you hear me now?
Yep.
Okay. Awesome. Hey, quick question for you. You mentioned Shark Tank earlier, and it made me think of Kevin O'Leary.
Yeah.
And I was wondering what you thought of his basic investment strategy, because every time I hear him talk, he talks about his own funds that he has, and he calls them O shares. And he always talks about, he's always emphasizing dividends and getting paid on a monthly basis and that kind of philosophy. And I was just wondering if you ever heard him talk much, or does he make sense to you?
I tell you, I have a hard time listening to that guy. He's just so negative, and he's such a smart aleck that I always said if I ever get a Shark Tank product, I'm going to come out and first thing I'm going to say is, hey, Kevin, I'm not going to go with you no matter what, so you can drop out of this now if you'd like. He really gets on my nerves. But I don't know what, yeah. So if he's I haven't read anything by him. I really I just have such a dislike for the guy. I mean, I'm sure he probably has to be tough, to be as successful as he's been and all that kind of stuff. But I really don't know,
Well, let me ask the question this way then. Like, aside from Shark Tank, you'll see he'll be talking on CNBC or something, and totally separated from, that business persona or whatever. But then he talks about, actual dividend investing and kind of like capital preservation and things like that. Those are the things I normally hear from him. Maybe you don't tune in because you're
the dividends are great. you're not going to get a company that's very profitable, that's growing by 30 or 40% a year, that's going to be paying a large dividend. Why would they do that? If they could invest that money back in their own company and earn, 20, 30, 40% on it, why would they pay a dividend where they're going to get a 1% return from a CD? They would just continue to reinvest that in the business. So that's one of the, I think, conundrums a lot of people run into when they start thinking about dividend investing. Everybody wants that 8% dividend yield that's going to grow by 15 or 20% a year. Oh, and tax-free too. We need that tax-free part. That I have people request that all the time, or used to anyway. But those companies don't exist. So getting paid back right away on something, you can do that with a privately held company. A publicly held company, those are two entirely different things. And I'm not sure why you would want to take out, if you really had the opportunity to grow your business 30, 40% a year by reinvesting in the business instead of paying out a dividend, which you have to pay taxes on at that point in time. And then you've got to find other investments for that money. I'm not sure why you would do that. And that's a tough call. That every business owner goes through that. Every business owner will, do we take our savings and invest in this new project, to continue to grow? Has the market that we're in now, is it saturated? Is there any more growth there? These are all questions. The CEOs, they don't really know the answers to that. They know what they would like to do. They might see potential, and they'll talk about that potential, but they don't know that they'll actually be able to capture it, or if that is going to be the way that it goes. I mean, if CEOs had the ability to accurately forecast the future, no companies would ever get in financial trouble, ever. So, and that's one thing that people really don't like to hear. I even hesitate to say it on this program. People want certainty. They want, I know this can grow 30 or 40% a year and pay a 10% dividend, and it's going to be tax-free, and the stock price is never going to go down. And, you can probably sell that to a lot of people who are willing to listen to that because it's exactly what they want to hear. But actually doing it is another thing entirely. And nobody's ever done all that, by the way.
No, okay.
You've had a lot of companies that have grown by 30, 40% a year for a long time. Microsoft is one of them. I think they may be have the longest track record of having above 25% a year average annual growth in sales. But
okay. Well, I appreciate it.
Well, I appreciate your call, and hey, have a good weekend, and happy belated Thanksgiving.
Hey, you too. Take care.
Thanks. Bye. And I'm going to go to Joe. Joe, you have a question or? Oh, Jerry. Okay. Well, I had two other calls. They both hung up. Guess that answer was too long-winded. Sorry about that. I can kind of get on that sometimes. And I'm glad the guy brought that question up, because that does make a lot of sense. And I know if you're an investor and you're reading the stuff that you read in your daily newspapers, the Wall Street Journal doesn't even give you enough information really to be able to look into a company and do real research. And I know a lot of people think that, well, I'm not going to research in stocks, I'm just going to buy funds. Well, guess what the funds are buying? The funds are buying stocks. And it helps. It really helps. If you want to make yourself feel better, investing is 90% mental. It's 10% knowledge. Actually, it's about 5% knowledge. And it's about 5% luck. But if you have the knowledge and you've got the temperament, eventually you'll get lucky. If you've got the knowledge and the temperament, then eventually you'll probably get lucky, probably do fairly well. So when you're looking at investments and you're looking at guarantees, well, the guarantees are things like fixed indexed annuities that we were talking about at some point in time. And we'll still continue to talk about that. That's a relatively new trend, by the way. That hasn't been around for all that long. A fixed indexed annuity. That's an annuity that's got a fixed guaranteed rate, or it has the rate of return on an index. They have different levels of participation, so that is really complicated. But I like the fixed portion of those, and they're like I think somebody called last week and asked me about that, and I said, yeah, there are more types, more annuities than there are models of cars that have ever existed. If you go back to the early 1900s and you count every model of car that ever existed, the number of annuities out there that are different, I mean, these are literally different. It's as different as a Cadillac was to a Model A. And there are more types of annuities than there are models of cars. So I feel bad for the general public. Those are tough. And so when I look at those types of products, I try to go in and take a look at it, figure out, okay, what is the most important thing about this? What am I trying to achieve? And will that help me achieve what I want to get out of it? So there are a bunch of different types of products out there. We'll continue to talk more about that because, by the way, that's where the that's where the differences really come in, and where you can actually make a lot of money. That well, not a lot of money, but relative to CDs, let's put it that way. Your fixed indexed annuities are paying rates that can be higher. They don't work anywhere near the same, by the way. We'll have to talk a little bit more about that, but I got to take another quick phone call here. I've got Dave. Dave, you want to talk about rail?
Yeah, Bill. Hello. Thanks for taking my call. First off, belated sympathy on the loss of your father.
Oh, thanks. I appreciate that.
He was obviously a splendid man. He raised a son like you.
Oh, well, I think he probably did a lot better than that.
Well, in any case, thank you. Yeah, how about an old friend called Rail? Are you still holding on to that?
You know what? I sold it a few years ago, and actually I held on to it for quite a while. And
yeah. Well,
yeah.
I don't know. Did you notice Friday? On a volume of a mere 33 million shares, it was up 37%.
Yeah.
Somebody buying it or something?
Probably.
Yeah.
You know, they've always had I thought a value that was significantly higher than the stock was. Everybody was really upset over almost all railroads, and they were just tiny. You know, they were super small relative to other railroad manufacturing companies.
Right.
And I thought people thought that they were dead. They gave up on it, and that happens. That actually happens quite a bit. And then something happens, and they people get excited about it, or somebody comes in and says, "Hey, we'll buy that."
For sure.
Yeah. So that's the
For sure. And while we're at it, how about another old horse? Remember good old Big Five Sporting Goods? One I always liked there.
Yeah.
I guess back in the day around St. Patty's Day or something like that. And I guess when everybody thought L.A. was, going into the ocean or something, and it was languishing around 50 cents. Now it's at $10 or whatever. I mean, a 20-bagger,
Yeah. What was the? I don't even remember the symbol on that one. That one came up on a different screen altogether. That was a momentum stock.
Uh-huh.
BF. I can't remember the name of that or the symbol. Do you remember?
Did you say that low price stuff like that, and then the $2 cut up bin is kind of hard to access and to trade because of what, volume or just?
Yeah.
I don't know, just difficult to take a position in.
Yeah, it depends on how big you are, how much money you're investing in it, and yeah. So, but Big Five.
So my order for 10,000 shares would be tough to work. Is that what you're saying?
It might be. Hey, I got to take a real quick commercial break. Did you want to hang on?
No, that's all. Thanks a lot. That's all I had to ask you about.
Thanks.
Thanks so much.
Sure.
And, take care.
Bye-bye.
4 seasons of winter, and you'd give.
And we're back. Hey, if you would like to talk with me over the phone, feel free to go to my website. It's bullingtoncapital.com. I can try to help you out as much as I possibly can. Oftentimes people call in, and it really doesn't have a whole lot to do with financial stuff, which is kind of interesting. But anyway, the I just wanted to go back to what we were talking about a little bit earlier, how the economy is actually progressing, how much is actually some really good stuff is going on. Valuations right now are a little bit on the high side, not super high though. And I think if you're looking out over the next 10 years, 5 or 10 years, I think you're doing very well. One of the things that I really need to focus on, I think, because of the aging of the population, so more and more people are reaching that level of Social Security age, and they need to make their money last as long as they do, is you've got to have some income ideas that are going to be around and that are better than 1%, because that's what CD rates are, that don't have a huge amount of volatility the way that stocks do. And one of the ideas I think is kind of interesting, because after all these years, I'm still a little surprised that people still think that the thing to do is to try to jump in and jump out of the market and try to time it up that way. And a lot of them will actually call and say, well, I don't want to time the market, but, and what they actually want to do is time the market. I just want to lock in my gains, and I don't want to have losses. And okay, you're trying to predict the market when you try to do that, because in order to lock in gains right before the market goes down, you have to know when it's going to go down. That's the definition of market timing. And that's not a wise way to do it. The smarter way to do it is to go in with an allocation in mind. Let's say you do the risk decline tolerance test. Mine is super simple, by the way. How much money can you think? How much of a decline are you willing to sit through in an effort to reach your long-term goals? Today, unless you're super, super rich, putting your money in CDs is really, it's just not an option. But I know a lot of people are doing that, and for some people, actually, it is the right option, because they're so afraid, and they have such a small tolerance for risk. Sometimes CDs at 1% or less, mostly less, are the right option. Why? Because it's their personality, and they've probably saved enough money to be able to make it on that. The vast majority of people are probably going to have something different. That's when it pays to have somebody to talk to, somebody to ask questions to, somebody who's constantly searching for that sort of thing, which is basically what I do. Is I'm searching for investments to put together a portfolio that can see you through retirement, one that's going to try to generate enough income for you to be able to retire and not have to go back to work if that's possible. The reason I say if that's possible, sometimes it's not. Sometimes people are going to have to work, past the age that they would have liked to have worked, because lifestyle. Actually, the stock market can have a big impact on that, and that is one of the things that it's kind of avoidable. When you have a certain amount of money, you need to generate, and you have a certain amount in your savings, and the stock market can fluctuate a lot. Don't put all your money in the stock market. Here's my rule of thumb. Take your decline tolerance. Let's say mine's at 40%. I can take a 40% decline. Why? Because I still plan on working for the next 10 years. Minimally. I still plan on working for the next 10 years, and I'm willing to put up with that kind of a volatility. So I could have up to 80% of my money in stocks, and then if the market got cut in half, the way it did in 2008 and 2009, or the way it did from the year 2000 to year 2003, if things were down by half, by the way, in 2000 through 2003, a lot of funds weren't down anywhere near 50%. In 2008 and 2009, it was a much higher concentration. Most funds went down quite a bit. So just thought I'd throw that out there for your for your benefit. But anyway, so if you're going to put money in stocks and you can't stand to see them drop by 50%, don't put all of your money in stocks. It's that simple. It is that simple. So figure out what you think you can do. I think I can take a 40% decline. Why? Because first of all, I'm not going anywhere. Secondly, I'm pretty sure it's going to come back. More importantly, I don't need the money for more than 10 years. So I've got a long time period. And that's the kind of stuff that we do. Try to make it as simple as humanly possible. So let's say somebody comes in with a $500,000 or $1 million. You got a $500,000. The if you can't stand to see that drop by $250,000 or more, okay, don't put it 100% in stock because you won't be able to jump out and jump back in. And if you do it once, by the way, it's going to be luck. The problem with that is you have to stay lucky. And at some point in time, you end up, just not doing well. So the better thing, in my opinion, is to come in, understand, markets are going to fluctuate a lot. Try to know yourself really well. When the market's down, go back in and look at it. When should you be looking at it? Anytime the market's been down more than 25%, that's when you want to start looking at rebalancing. And it's not taking money out of the market. It's actually adding money to the market. The 25% corrections are not that common. When they do come, a small percentage of those will go on even further and be down 50. So at that point, I'm probably doubling down again. Now, if you're 80, that ain't happening. So if you're under the age of 65, then yeah, I think that's a smart thing to do. So that's what I would try to get through your mind is you won't know when the market's going to go down, when it's going to recover. Predicting the future is an incredibly difficult thing to do, especially with a high degree of accuracy. So you just have to have a plan, and it may be the plan may be I'm just going to hang on to what I got and stick it out. That's good. That's awesome. And you don't have to worry about any of this. Just make sure that stock side is really well diversified. On the fixed income side, we're holding a couple bond funds now. I simplified it. I dropped it down to 2. Why? Because they're managed by one of the largest asset managers on the planet. They've had very good track records, and it's more for I invested in more for safety of not having a huge drop in the value of those funds. They still fluctuate. They just don't fluctuate like stocks do. And outside of that, we've been looking at fixed indexed annuities, regular annuities. They're coming out with different types and features. They've always been doing that, by the way. That's why there's so many different models. And but now I think that it's more than ever, that's something that you really might want to look at. Why? Because you can get an income that's going to be substantially higher than you can get in CDs right now. The chances of CDs going up in value are actually the interest rate on them going up in value. In other words, going from a sub 1% to a 4 or 5%, they're extremely small. I mean, that's probably not going to happen for a decade. Listen to what Powell had to say about that. That's probably the hardest part that most people, they need a safer source. I've been using a couple different products. Actually, I've been using mostly one from Nationwide more recently over the last few months. It's got a really good return. I feel like it's a really good return. If you'd like to know more about that, feel free to give me a call. If you're getting close to retirement and you'd like to have a little bit more predictability or certainty, remember these products are not governed. They're not guaranteed like a CD is by the FDIC or the Treasury. That's the federal government. That's a really good guarantee, by the way, because the federal government owns their own printing presses, and they can print the money and hand it to you. But so you got to be careful with the types of companies. You want to use the more highly rated companies there. And I think that those are really good options for today. When you're looking at this today, I think it's a really good opportunity for everybody. Insurance companies can handle the risk for you. They're actually spreading that risk out over a large number of people. They can wait it out because they're companies, they're not people. So you get a much better degree of safety, letting the people that handle that do that for you. And the rates of returns are extremely competitive. I don't have it pulled up on my laptop right now, but if you'd like to see some examples of what you might be able to expect based on the money that you invest, just email me, and I will email you a link where you can go in and you can play around with it. It'll show you if you put this much in, you could get this much out, and or if you knew how much you needed to have, it would tell you how much money that you need to have invested to actually generate that income. So it's a fairly simple site to operate. And I really, again, I think about past experience with a lot of these products. These are relatively new. I think it's a great innovation that's come up with by a lot of different companies. So if you're really looking at trying to figure out how much income you can generate during retirement, this is a big deal. This is a really big deal. Income for retirement. This is a huge innovation that's come to the industry, and which is generally what happens. Somebody sees a need and then they build a product to fill that need. So when I hear the music, that means my show is actually over. Again, I appreciate everybody listening this weekend. I hope everybody had a happy Thanksgiving. And I'll be back again next week, Saturday morning, right here on 1420. This is Bill Bullington. Have a good week, good investing, and good luck.
You just caught another edition of the Bullington Capital Report, broadcasting every Saturday at 11 a.m. on AM 1420, The Answer. If you have a question and you'd like to speak to Bill personally, you can call him at 330-664-0700. That's 330-664-0700. Or online at bullingtoncapital.com. That's bullingtoncapital.com.
Past performance may not be indicative of future results. Therefore, no current or prospective client should assume that the future performance of any specific investment strategy, including the investments and/or investment strategies recommended and/or purchased by advisor, or product made reference to directly or indirectly will be profitable. Different types of investment involve varying degrees of risk, and there can be no assurance that any specific investment will either be suitable or profitable for a client's investment portfolio. No client or prospective client should assume that any information presented serves as the receipt of or substitute for personalized investment advice from the advisor or any other investment professional. The preceding program has been paid for by Bullington Capital Management, LLC.